Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. The first one is I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open, generally from some kind of news-related event or an earnings announcement, those movements at the open create opportunity. And the opportunity for traders is when they can identify a specific price where stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. In the course, traders learn exactly how to calculate those specific price levels. They learn which stocks it works the best with, what are the criteria we use each and every day. Everything traders need to know in order to trade the gap successfully is found in the course. The second strategy in the course is known as the gap fill strategy. When stocks do gap higher or lower at the open, they leave what's called an open gap. Those open gaps at some point in the future, sometimes the same day, and sometimes it's weeks or months or even years later, those open gaps will be filled. I teach traders how to track them. I give them a tool to track them, and then I teach traders how to trade them. Not all trades are created equal, so it all depends on how a stock is coming in to fill a gap on whether or not it's a viable trade and a highly probable profit opportunity. The second thing I do is give traders an opportunity to get my gap trade sent to them each and every day at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the market's even opened for business. Here's a copy of the list that went out to traders today. As you can see, it arrived at 9 o'clock a.m. on the button. That's Eastern Standard Time. We had 6 potential morning gap trades on the board today. Now, these are the opportunities that the market was presenting to us. We only want to take a trade if these stocks come into the specific price level that we calculate because we know it's the highest probability price level on the board. If a stock does not hit our price level, we don't want the trade. It's off the board. It's a no trade. The first one that came into our price level today was Nordstrom, JWN. Gap lower. Support levels are $43.65, $42.94, and $42.23. Stop and profit target is about 30 to 55 cents. These are minimum profit targets. Sometimes the market gives us the minimum. Sometimes the market gives us a whole lot more. I also note that support levels on this stock are close together. This is a good support zone. Traders can take a partial position at the first support and add if the stock was to trade lower. The second stock that hit our price level today, in fact it hit 2 price levels, is Bluebird Bio, BLUE. Gap lower. Support levels are $129.04 and $125.22, and a third level at $121.40. Stop and profit target is about 90 cents to $1.70. Now, in addition to this list, I give an entire list every single day of potential gap fill trades. These are stocks that are coming back to fill an open gap left open from a prior trading day, and these were morning gap trades from some day in the past. One of these stocks on the list filled its gap today. It's the second one down, CHKP. You can see where the gap fill level is listed at $115 even. It's a short trade, meaning we're looking to sell short the stock. When it hits $115, it should have a price reaction downward, meaning in the other direction, and provide another profit opportunity for us. Let's take a look at some charts and see exactly what happened today off of these lists. Here's a chart of Nordstrom. As you can see, on the prior trading day, which was Friday, the stock closed over $47 a share. The stock was opening this morning around $45 and traded lower. We identified the level, and this is exactly the same level that traders who have taken the course would would be able to calculate on their own $43.65. Now, there are a couple of nuances with this trade, so let's turn this into a little bit of a teachable moment. The stock in the first 10-minute candle of the day came down, stopped short around $44 a share. The next 10-minute candle went slightly below that, but then the stock fought $44 a share for about an hour's time. When a stock does this, it's called consolidation. This stock was consolidating over and above our level of $43.65. Among a lot of other things, this is discussed in detail in the course. What this does is it changes the probabilities of this trade. Not to say the trade won't work, but we would have loved to see the stock in the third or even the second candle of the day come into our $43.65 level. That would have produced a nice big juicy bounce off that level, also known as a price reaction in the other direction. After the stock consolidated, it did come into the $43.65 level. Remember, this level is like a magnet. It's going to draw the stock to these levels. And in the course, I teach traders exactly why this is. Once the stock hit that level, and I'll move the chart over a little bit so we can see, it made a low of $43.50, just 15 cents below the level, well within our stop loss limitation. And then just minutes later, the stock was at a high of $43.98, representing a possible gain of 33 cents. The level identified in the email that went out to traders this morning was a minimum profit target of 30 cents, so it was right in the sweet spot. And the stock may yet go higher today, I don't know, but either way, it was a profitable trade off the level identified at 9 o'clock in the morning before the market even opened for trading. The next trade is a chart of Bluebird Bio. And I'm going to go over this one in detail too, because it's another teachable moment. The first level from the email this morning was $129.04. The stock closed the prior trading day over $137 a share, so it was getting a nice haircut at the open, creating an opportunity for traders that can identify a price where these stocks should have a price reaction in the other direction. I'm going to take this chart down to a 1-minute time frame so we can see exactly what happened. When the stock opened, you can see here in the first minute of the day, it stopped short, making a low of 131.05. Then in the second minute of the day, the stock made a low of 129.30. It came close to our level and had a nice bounce in the upward direction, or a price reaction in the other direction, over a dollar bounce. And what that does is it takes this 129.04 off the table. It came too close. It had the type of bounce we were looking for, and then it came down into the 129.04 level, and you can see here it began to consolidate in and around that level, back and forth through that level for several minutes. And what that tells you is the stock is poised to go lower. All this is discussed and taught in the course in great detail. Let's go back to a different time frame and look what happened when the stock approached the second level given out before the market opened. Here we're on a 5-minute chart, and you can see what happened. The stock was consolidating. Even though it popped above and made a high of 130.90, it still shows you the power of these price levels and how the 129.04 still worked even though the stock went slightly below our stop loss limitation. But the fact that the market came close, or the stock came close in the second minute of the day, that really took the trade at the 129.04 off the table. But what happened was the stock came down into the 125.22 level, making a low in this candle of 125.10, just 12 cents below the level, and then just a few minutes later, the stock was at a high of $127.45 for a tremendous bounce off the second level given out before the market even opened for trading. You can see the power of these price levels that traders learn how to calculate for themselves in the course at Lazy Gap Trader. As traders, we know not every trade is going to work out 100% of the time, But what's taught in the course are which trades to avoid and which trades are the highest probability trades that we can take. The last one we'll look at is Checkpoint Software, CHKP. Remember the level from the email. The gap fill trade at 115 even. The stock went slightly higher, but right around our stop loss limitation as taught in the course. And look what happened. The stock collapsed and has already made a low of $113.76 for about a $1.25 gain off the level given out before the market even opened for business. We do this each and every day. Traders learn everything they need to know in order to trade the gaps successfully. If you want to learn a strategy that you can use for the rest of your trading career, then come over to Lazy Gap Trader and learn everything you need to know to trade gaps successfully every single day. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.